We are jumping straight into the story of USA Rare Earth today. Everyone's watching the price action, the recent volatility. But the real story here isn't the stock chart at all. It's the geopolitical shift and the fact that this company is about to go from a concept to a real producer.
Exactly. For you, the learner, this is the definition of an inflection point. The market is, well, it's shifting from just speculating on a Texas deposit to actually pricing in the execution risk at their magnet facility.
It's a huge shift in focus.
It is. This whole thing is about securing the domestic supply chain for critical materials. A challenge where, let's be honest, China currently dominates.
You are tuned in to the Easy Money Show, where we make sense of the market's biggest moves. I'm really glad you're with us for this one.
And if you're enjoying the show, finding this analysis helpful, please make sure to subscribe, hit that like button. It really helps the channel grow.
And definitely let us know in the comments which stock you want us to simplify next.
All right, so let's look at the why behind USA Rare Earth. The bull case, it really starts with their competitive moat, and that moat is vertical integration, all of it outside of China.
Okay, let's unpack this because this is the core of it all. China controls, over 90% of the global-centered neodymium magnet manufacturing. So this company is explicitly trying to fix a national security gap by bringing that capacity home.
That's precisely right. They are building a full mine-to-magnet supply chain. It starts with the mine. They control the Round Top deposit in Texas.
And that's not just any hole in the ground. It holds 15 of the 17 rare earth elements, plus others like lithium.
Exactly. And owning that mine eliminates their long-term reliance on any foreign feedstock. So no more worrying about Chinese export quotas.
Right. So from the mine, you go to processing.
And that's their next advantage. They're using a proprietary method, continuous ion exchange, or CIX, for separation. It's a cleaner, more efficient process that reduces reliance on that traditional, messy infrastructure.
And that all leads to the final piece, manufacturing.
Yes, the Stillwater, Oklahoma facility. It's the first large-scale, U.S.-centered neodymium magnet factory in decades. And that capacity, because it's domestic, commands a premium. Everyone wants supply security.
Now, securing that whole supply chain was really sped up by the less common metals acquisition, correct? That seemed to add that China rare earth metal and alloy capacity, almost immediately.
It was a massive strategic move.
It seems like a huge asset to have right before you flip the switch on production.
It absolutely was. And that brings us to the bull case, which is, well, it's all about demand. Demand is the company's biggest strength here. This is a supply-constrained market, not a demand-constrained one.
So they're not looking for customers?
Not at all. Demand is stated to be locked in all the way through 2033. The company has said they don't have enough capacity to meet existing orders, and they're already planning to double output by 2027.
Okay, here's where it gets really interesting for me. What's the timeline for that revenue inflection point? When do they start making money?
The Stillwater facility is scheduled to begin commercial-scale production in the first half of Q1 2026.
So very soon.
Very soon. And this follows the proof of concept, which was successful. The Innovations Lab produced its first batch of sintered magnets back in January of 2025.
But what's the initial target for that facility?
Initial commissioning targets 1,200 metric tons of annual capacity, with plans to scale up significantly from there to nearly 5,000 metric tons annually at full capacity.
And we also have some pretty significant institutional confidence backing this whole thesis up.
We do. The company was added to the Russell 2000 and Russell 3000 indexes on December 22, 2025. That provides a kind of structural support from passive inflows, guaranteed buyers, essentially.
And we saw the market react to key milestones in real time. Like that stock surge, it was about 25% on December 4, 2025, right after the LCM supply deal was announced.
Yes, that shows the market recognizes that they're completing the supply chain. We've also seen, cluster buying recently.
Yeah.
From some very established asset managers. Calamos Advisors, Darwin Wealth Management, Geode, Bank of America, and Newton. These aren't small players.
Okay, so the thesis is strong, but this is still a growth stage business. There are inherent risks. What are the top two challenges the company faces right now?
The number one challenge is execution and ramp delays. It's always the biggest risk.
Okay, let's talk about that.
Scaling from a small pilot production up to 1,200 metric tons a year it's just incredibly complex. We've already seen reports of unexpected production delays in a key magnet project.
So it's a real risk, not a theoretical one.
Absolutely. Now, the market has priced in some of that uncertainty. We saw that in a recent decline. And the locked-in demand through 2033 does provide some revenue visibility, even if the ramp is a little slow.
And the second major risk, I have to assume it's money. This whole operation sounds incredibly capital intensive.
It is. High capital requirements and financing risk, that's material. Mining and magnet manufacturing cost a fortune. The company recently issued common stock to bolster liquidity.
Which is necessary, but it deletes existing shareholders.
It does. And there's always the risk that more capital will be needed down the line, leading to more dilution.
But the institutional accumulation we just talked about seems to suggest that the sophisticated investors are okay with that risk.
It suggests they're comfortable with the capital structure, yes.
Right.
They believe the potential reward, the geopolitical moat, outweighs the risk of dilution.
Okay, so for you, the learner, what specific events should you be marking on your calendar right now to de-risk this position?
For Q1 2026, the focus is squarely on execution.
The big one has to be the commercial launch of the Stillwater facility.
That's the one. That is the key proof of concept milestone. It confirms the vertical integration is truly operational.
What else?
I'd also expect to see news on Innovations Lab prototyping for customers. This validates market interest beyond the major contracts they've already signed.
And given the national security angle, I'd keep an eye out for potential government contract announcements. That seems like a perfect fit with U.S. critical minerals policy.
A Department of Defense contract would be a massive de-risking event. Also, there's an analyst and investor webinar scheduled for February 12, 2025. That will provide some really important guidance updates for the year ahead.
So to summarize the investment horizon, this looks like a multi-year hold, but with clear swing trade opportunities right into that Q1 2026 launch.
That's a good way to put it.
That's the lowdown on USA Rare Earth for today. It's a compelling story of reshoring a vital industrial capability backed by strong demand and geopolitical tailwinds. The ultimate question for you, the learner, is this. How much of that execution risk is truly reflected in the current valuation, especially given the level of institutional buying we've already seen? That's something to keep mulling over as we approach Q1 2026.
If you haven't already, subscribe so you don't miss our next breakdown.
We'll catch you on the next one.